Indonesia is destroying themselves. Reliance on resource exports, a double-edged sword. Indonesia's abundant natural resources have long been its economic backbone. The nation is one of the world's largest exporters of coal, palm oil, natural gas, and nickel. These commodities contribute significantly to Indonesia's GDP, with resource exports accounting for nearly 50% of total export revenue in 2023. On the surface, this seems like a strength, but it's a double-edged sword that leaves the economy vulnerable to global market fluctuations. Let's start with coal, Indonesia's largest export. The country is the world's top thermal coal exporter, supplying major markets like China and India. But as the world shifts toward renewable energy, the demand for coal is shrinking. In 2024, global coal prices dropped by 20%, leaving Indonesian coal producers scrambling. This dependency on a declining industry puts millions of jobs at risk and creates uncertainty for regional economies reliant on mining. Palm oil, another major export, faces its own set of challenges. While it remains a key driver of Indonesia's economy, accounting for over $23 billion in exports annually, the industry is under fire for its environmental impact. Deforestation and habitat destruction have led to international boycotts and stricter regulations in key markets like the European Union. This threatens Indonesia's ability to sustain its dominance in the global palm oil market. The nickel industry, fueled by the global transition to electric vehicles, EVs, offers a glimmer of hope. Indonesia controls over 30% of the world's nickel reserves, making it a critical player in the EV supply chain. However, the country's focus on raw exports rather than value-added products limits its economic gains. While countries like China refine Indonesian nickel into high-value batteries, Indonesia misses out on the most lucrative parts of the supply chain. Reliance on resource exports also makes Indonesia highly susceptible to external shocks. For instance, the global economic slowdown in 2024, coupled with rising interest rates in the US and Europe, reduced demand for commodities. This hit Indonesia's export revenue hard, leading to a trade deficit and putting pressure on the rupiah. A weaker currency, in turn, increased the cost of imported goods, worsening inflation and squeezing household budgets. The overdependence on resource exports has also stifled the development of other industries. Manufacturing, which could create more stable and higher-paying jobs, has lagged behind. Despite efforts to diversify the economy, the industrial sector's contribution to GDP remains below 20%, far less than in neighboring countries like Vietnam and Thailand. The environmental cost of resource extraction is another significant concern. Rampant deforestation, water pollution, and land degradation have not only harmed ecosystems, but also displaced indigenous communities. These issues have sparked protests and international criticism, putting Indonesia's global reputation at risk. The government has made efforts to address these challenges. Policies like the Downstreaming Initiative aim to boost value-added industries by requiring companies to process raw materials domestically. For example, the ban on nickel ore exports has pushed companies to build smelters in Indonesia. While these moves are promising, they require massive investments in infrastructure and technology to be truly effective. Indonesia's reliance on resource exports is both a blessing and a curse. While it provides significant revenue, it leaves the economy exposed to global volatility and limits long-term growth potential. To build a more resilient economy, Indonesia must diversify its industries, invest in value-added production, and adopt sustainable practices. In the next context, we'll examine how external economic pressures, including interest rates and global trade dynamics, further complicate Indonesia's path to prosperity.